The Federal Reserve, often called the Fed, is the central bank of the United States. Established in 1913, its creation was a response to a series of financial panics that had plagued the nation. Imagine the Fed as the bank for all other banks in the country. Just like your local bank manages your money, the Fed manages the money supply of the entire nation. The Fed's primary goal is to keep the U.S. financial system stable and secure. It's a big job with a lot of responsibility. The Fed doesn't print dollar bills. That's the Treasury Department's job. Instead, the Fed influences the amount of money available in the economy through its various functions. One of the Fed's most important tasks is controlling inflation. Inflation is when prices for goods and services rise too quickly, making it harder for people to afford things. Think about how much a gallon of milk cost a few years ago compared to today. The Fed uses its tools to keep inflation in check, aiming for a rate of around 2% per year. The Fed also plays a crucial role in managing employment levels. When unemployment is high, the Fed can lower interest rates to encourage businesses to borrow money, expand, and hire more workers. Conversely, when the economy is overheating, the Fed might raise interest rates to prevent inflation from spiraling out of control. The Fed's actions have a direct impact on your life, even if you don't realize it. When the Fed lowers interest rates, it becomes cheaper for people to borrow money for things like homes, cars, and starting businesses. This can stimulate the economy, but also lead to inflation if not managed carefully. On the other hand, when the Fed raises interest rates, borrowing becomes more expensive, which can slow down the economy and potentially lead to job losses. The Fed's decisions on interest rates are a balancing act, aiming for sustainable economic growth without excessive inflation. For over a century, the Federal Reserve has played a pivotal role in shaping the U.S. economy. From navigating the Great Depression to combating the 2008 financial crisis, the Fed's actions have had profound and lasting impacts. Its decisions influence everything from the cost of your morning coffee to the value of your retirement savings. Understanding the role of the Federal Reserve is essential for anyone who wants to be an informed citizen and participant in the economy. The Fed's decisions affect us all, shaping the financial landscape for generations to come.